CIFR stock had a tough session on Thursday, falling sharply by 10.98% or $2.31 to close the day at $18.72 per share. It was one of the stock's biggest single-day declines in recent weeks and came as a surprise to many traders who have been watching Cipher Mining's incredible momentum over the past month. Just days ago, CIFR had surged to new 52-week highs, hitting $21.48 intraday and closing above $20 for the first time in its history. The rally had been relentless, a blend of strong fundamentals, technical breakouts, and a powerful narrative around its partnership with Google and its pivot into high-performance AI infrastructure. But on Thursday, the rally hit a wall. So what exactly happened today? What was behind the sell-off, and does this change the bigger picture for Cipher Mining? Let's break it down and see what's really going on. First, let's start with the obvious. Thursday's move wasn't just about Cipher alone. The entire market was risk-off. Broader indices were red across the board, and growth-oriented names, particularly those tied to technology, AI, and crypto, were hit the hardest. Renewed concerns over global trade tensions, coupled with worries about economic slowing in key markets, triggered a wave of selling. When markets go defensive, stocks like CIFR, which have outperformed massively, are usually the first to be sold. That said, there's more to the story than just macro headwinds. Cipher's decline today looks very much like a textbook case of profit-taking after an extended rally. Let's remember, this stock had climbed over 20% on Monday alone, followed by continued strength through Tuesday, and even an after-hours gain that pushed it further into new territory. It's entirely natural for some traders, especially short-term ones, to lock in profits after that kind of move. High-momentum stocks often attract fast money, and when the first signs of weakness appear, maybe a red candle on the chart, or a shift in volume, those traders exit quickly, which can amplify the decline. That's part of what we saw today. But there's also a psychological component. Cipher's move above $20 this week represented a major technical milestone. It was a round number resistance level, a big, clean figure that tends to attract attention from both traders and algorithms. Once it broke through, momentum buyers piled in. But when the rally started to stall near 21.5, many of those same traders began to tighten stops. As soon as the price rolled over, those stops triggered, cascading into automated selling pressure. This is how strong rallies often take a breather. They run hard, hit overextended territory, and then pull back sharply before resetting for the next leg. It's also worth noting that Cipher's RSI and other momentum indicators were flashing overbought conditions earlier this week. The stock had moved far above its 20-day and 50-day moving averages, creating a short-term imbalance between price and underlying support zones. Thursday's drop, while painful in percentage terms, actually helped cool off those technical readings. In that sense, it may prove to be a healthy reset rather than a structural breakdown. Now, was there any company-specific news that caused this? No, there wasn't. In fact, the fundamentals remain unchanged. Cipher Mining continues to build on a solid operational foundation. The company mined 251 Bitcoin in September, selling 158 while holding around 1,500 in its treasury. Its self-mining capacity stands at 23.6 exahash per second, with 114,000 deployed miners running at an industry-leading efficiency of 16.8 joules per terahash. That efficiency is critical, because it positions Cipher as one of the lowest-cost producers in the Bitcoin mining sector. The company has also completed Phase 1 of its Black Pearl facility and continues to expand at its Barber Lake site. These projects are the backbone of its long-term growth strategy, both for traditional mining and for its new high-performance computing initiatives. And of course, the biggest catalyst in play remains the partnership with Google and Fluidstack, a 10-year, $3 billion AI hosting agreement that effectively transforms Cipher from a miner into an infrastructure provider. Google's involvement, including a $1.4 billion lease backstop and a roughly 5% equity stake through warrants, isn't a small detail, it's a strategic signal. It validates Cipher's pivot into the AI infrastructure space and gives it a long-term growth engine that few competitors can match. So, if the fundamentals are strong and the narrative remains intact, why the sell-off? The simple answer is valuation recalibration. When a stock runs this far, this fast, the market eventually pauses to reassess. Investors begin to ask, how much of the future story is already priced in? Is the current price sustainable without new catalysts? There's also been renewed discussion about warrant-related dilution and potential supply concerns. While these are long-term considerations rather than imminent threats, they do tend to resurface during pullbacks. The market often uses these moments to test conviction, both from institutional investors and retail holders alike. That's why today's move, while sharp, shouldn't be viewed as a sign of collapse. In many ways, it's the market shaking out weak hands. It's a natural part of any parabolic run. Stocks don't move in straight lines forever. Even in the strongest bull trends, you'll see deep retracements that help reset expectations and build new bases of support. Looking at the technicals, Cipher now finds itself around the $18 to $19 zone, a key area that previously acted as resistance during its breakout earlier in the week. If the stock can stabilize here, that prior resistance could now flip into support. If buyers defend this area and volume starts to pick back up, we could see a rebound fairly quickly. The next few sessions will be important for gauging that balance. Watch for whether selling volume starts to dry up. That's usually the first sign of exhaustion from the bears. If that happens, it often signals the end of a pullback phase and the beginning of a consolidation period before the next upward move. Now, what does this mean for investors who believe in the long-term story? Honestly, not much changes. The partnership with Google remains a massive long-term catalyst. The AI hosting expansion remains underway. Cipher continues to execute operationally and has shown a consistent ability to scale while maintaining efficiency. Those are the fundamentals that matter. But what today's sell-off reminds us is that the path upward is never linear. Strong stocks can and will experience big swings, especially those sitting at the crossroads of multiple high-growth narratives like crypto, energy, and AI. Volatility is the price of admission. So, what's the most likely outcome from here? The market will probably spend a few days digesting this move. If macro conditions stabilize and risk appetite returns, Cipher could easily resume its uptrend, perhaps testing the $20 level again soon. If weakness persists across the sector, it may consolidate sideways for a while, allowing its moving averages to catch up before the next leg higher. Either way, today's decline looks more like a cooling phase than the end of the story. The fundamentals are too strong, the partnerships too significant, and the broader narrative too aligned with where the market is heading for this to be anything more than a temporary setback. For traders, this kind of move can actually be an opportunity. Sharp pullbacks often set up attractive re-entry points, as long as the underlying thesis remains intact. For long-term investors, this may simply be a moment to zoom out, remember why they own the stock, and recognize that volatility is part of the journey. The Cipher story hasn't changed. It's still about a company that's rapidly evolving beyond mining, into AI infrastructure, data hosting, and high-performance computing. It's still about efficiency, scale, and strategic partnerships. And it's still about a firm that's positioning itself at the intersection of two of the most powerful trends in technology today. So yes, today's session was rough. But big picture, it's just a pause in what has been an extraordinary run. If the company continues to execute, and if market sentiment stabilizes, there's every reason to believe that Cipher's longer-term trend remains bullish. As always, it's not the daily candles that define a company's trajectory, it's the direction of the story, and Cipher's story is still moving firmly forward.